Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? Yes, I know. I hear it. I hear it all the time. Especially those people who are big fans of cryptos. Usually they're jumping all over. Whenever something happens to gold and silver and there's a drop in price, usually I got them posting, smart alecky comments and stuff like that, except for there's a problem. Gold and silver is not the only thing dropping down. So is cryptos. And I have a theory about that. There's a couple things going on, but there's no doubt at all that these commodities are being manipulated. I keep saying that, and I've had people go, man, you just say that all the time. Yeah, I do, because it's the truth. And that's why I will bring on videos of experts explaining to you what's going on, and they'll tell you that they're being smashed. Gold and silver are being hit hardcore right now. A few videos ago, I told you, get ready, because the rumor is they wanted to smash silver all the way down to $11 an ounce, and they wanted gold back down around $1,200. Now, I wasn't sure whether or not they can accomplish that. Foolish me. Obviously, they have all the means necessary to do so. But I think there's something bigger going on, and I'll explain it to you here in just a moment. Before we get started, hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. Right now is a good time to be buying gold and silver. It's cheap. It's on sale. Prices are dropping. No, let me just be honest about something. This is how you know people aren't paying attention to the spot market, because the premiums on precious metals right now are ridiculously high, and people are still paying those high premiums. They're not just paying them just to be wasting money. They're paying them because they know the true value of those precious metals are much higher than what they're being charged for them. And that's why they're willing to pay the premiums. So when you go to buy your precious metals, go to our friends over there at Money Metals Exchange. They absolutely got some of the most competitive prices out there, hands down. And if you spend more than $100, then use promo code Pimpy, P-I-M-P-Y, and you'll get a free half ounce of silver. So when I first started looking at all this, I almost fell out of my chair. I wanted to laugh so hard about what I was seeing. I'll show you what I'm talking about here in just a moment. So where are we at? Man, cryptos are getting smashed just like gold and silver. Bitcoin's at $39,136. Ethereum's at $2,880. Solana is at $97.27. XRP just keeps dropping down lower and lower as far as their place in market cap. They're down to 66 cents though. Cardano's at 86 cents. Avalanche at $70. Dogecoin's at 13 cents. It's been kind of sitting around that range, so they're doing okay. It's at 5.5%. Polkadot's at $17.60. If you're not paying attention to what's going on with Shiba, even though the price is at 4024, there is a huge burning event happening. People have been sending their coins in to get burnt. In other words, they're removing the amount of coins in circulation, so they're burning the coins. We'll talk more about that in a little while, but what they're trying to do now is this mad push to get Shiba up to 1 cent. So hopefully you guys all held onto your Shibas. Polygon's at $1.30, and Crypto.com's at 39 cents. Yeah, just look at this ugliness over here. All this red in the graphs. Satama's no exception. You got 8 zeros, 5. Well, over the past hour, nothing's happened to them. Over the past 24 hours, they are down 9.4%. Over the last 7 days, they are down 17.4%. Over the last 14 days, they are still down 30.2%. And over the last 30 days, they lost a total of 55.7% of their overall value. And I still have all my Satamas because I continue to get reflections. And I'm going to hold on to them because somebody is buying a lot of these big bags of coins, and which is very interesting to me. So here's what I was talking about. Shiba Inu owners flocked to burn portal with 11 billion tokens removed. Yeah, the group burned 11 billion tokens that belong to Shiba. Think supply and demand. As it removes the coins out of circulation, that means there's going to be less coins there, which then will increase its value. It says a new burning mechanism launched by developers of Shiba Inu will reward community members who burn their protocol native Shiba tokens on its Shiba Swap exchange platform. Burning crypto means permanently removing tokens from circulation by sending them to a wallet from which they can never be retrieved. Crypto projects may burn tokens to reduce supply, which could lead to an increased price in the future as tokens become more scarce. While the community already burns tokens, the portal incentivizes the process for users. It allows users to send Shiba tokens to a dead wallet address and in exchange sends burnt Shiba tokens to users. They can then be staked to generate rewards for users in the form of Roshi tokens, a separate token created by the Shiba Inu community. Some 11 billion Shiba tokens have been burned since the portal started operating on Sunday, data shows. This amounts to approximately $251,000 at the current price. Participants are earning current analyzed yields of 9% at the writing time. 9% return on your money, man. That's a pretty good dang return. The mechanism did little to prop up Shiba's price amid a downturn in the broader market. Shiba has lost 5.3% in the past 24 hours, with most losses coming after the market-wide slide in Asia morning hours on Monday. Well, what are they talking about? Well, China put themselves in lockdown again. So it's affecting the markets. Yep, they're locking down again. For those of you who like the dinar, get ready. Oil prices are going to drop. We don't need that right about now, but it's coming. So congrats to Shiba's people. Just keep doing what you're doing. So we take a look at silver today. It's down to $23.67. Yeah, $23.67. Don't panic. I'm telling you, do not fall for this. So we take a look at where silver was around the 18th of April. It was about $26.21. Ever since then, it's been dropping. It's now down to about $21.61. That's a pretty huge drop. And it continues to drop. And the dollar isn't strong. We know this. I mean, come on. With China closing down, that's even more of a reason to be running over to precious metals. Yes. So I'm not falling for this, and nobody should. To me, that's just more of a sign to start stacking, and I'm going to prove it to you here in just a moment. We take a look at gold's at $1,898.50. And you can see, just like silver, around April the 18th, is at almost $2,000. So it's dropped about, $100. So both gold and silver are dropping at the moment when they should be thriving. China now back in lockdown? What the heck? That means less people traveling, less people consuming. The crazy thing is, I was watching videos of them over there burning crops, the food crops. So here we go. Here's the story that they're trying to spoon feed us. Gold falls as investors shun precious metals for more attractive safe havens. Wait till they tell you what safe haven they're talking about. Nobody is shunning metals. There's a shortage worldwide. So even though the spot market prices are dropping, you can see the prices of gold are above 2,000. People are paying this because they know the truth. And nobody is buying the lying markets. So here we go. Gold falls as investors shun precious metals for more attractive safe havens. Yeah, I'm serious. This is classic. It says gold futures fell on Monday with the traditional haven finding no support as investors dumped stocks and other perceived risky assets while buying into other perceived safe haven assets, including U.S. Treasuries, bonds, if there's a bond bubble going on, and other government bonds. Gold has not benefited much from the renewed flight to safety that has gripped the market since Friday. Investors appear to be fleeing to the safety of the world's reserve currency and U.S. Treasuries rather than the traditional safe havens of gold. Treasury yields were weaker along the curve today, but remained elevated on expectation that the Fed will front-run rate hikes in the coming months. Look, one of the ways you can force people into the central bank digital currency is to just totally collapse the markets. Everything. Stocks, bonds, cryptos, gold, silver. Just smash it down. Then hold it down because they're already out there burning crops. Yep, they're killing the fowls, they're killing the cattle. I'm not even kidding. It's in real news being reported around the world. Why the hell would you do that? Well, they plan on starving you. You're going to be so desperate for money, desperate to eat, that they're going to offer you then the central bank digital currency because you need that universal basic income and it's going to come your way. That's why I'm saying don't dump your gold and silver. I don't care if it drops down to $1. I said that before. Gold and silver drop down to $1 wouldn't bother me at all because I know better. I know the truth, and I'm going to prove it to you here in just a moment. So this article is trying to tell us that people are dumping precious metals to run over to dollars and bonds. Let's listen to our buddy McGuire here. Listen to what he's going to say is the plan with China and Russia coming up here.
All right, Andrew McGuire, with regard to gold and silver, 2 weeks in these markets seems like a month or even longer, and your focus has never come off the paper to physical war that's happening even before the Russia conflict. To answer a lot of requests that we're getting here, can you first off just start off by picking up the thread from our last episode 2 weeks ago?
Yeah, Shane, great to be with you and great to be with everybody again. Every single episode has actually focused on, through all of the threads, on the progress of this ongoing paper to physical market battle. And ultimately, that's leading into the price reset. Now, it's been a process.
Do you see what he's saying? There is a physical to paper war going on for precious metals. The paper market is being used to drive the value of the physical down. Andrew's about to explain to you why the paper side of this war going on between the paper markets and the physical markets, why paper is about to lose. Listen to his explanation, and this is why you shouldn't be discouraged by the price dropping, not at all.
The blowbacks from the Russian sanctions have accelerated this gold revaluation process significantly. We must not lose sight of the fact that the introduction of Basel III NSFR standards actually already had lit the fuse. Let's look at what's happening since Russia achieved their objectives of stabilizing the ruble versus the global fiat crosses, which is a major component here. Now, following ongoing meetings with our well-connected liquidity providers, there are some significant developments which I will address regarding fresh bullish gold drivers following Russia's removal of the fixed 5,000 per gram ruble gold floor peg, and in announcing that it would instead buy gold from the commercial banks at a negotiated price. Now, there's been a lot of confusion over this, so let's put that to bed right away. Gold had been underpinned by this 5,000 per gram ruble benchmark, which in just 2 weeks of being implemented had achieved its planned objective of strengthening and stabilizing the ruble US dollar exchange rate. The Russian central bank was able to value dollar price gold based upon a Russia-centric higher physical supply demand price. Now, the strategic recovery of the ruble against the dollar was achieved by resetting a true global supply demand gold price, physical. Now, as a part of a coordinated plan, and this was coordinated to integrate gold, silver, and hard asset commodities into the global monetary system, the ruble US dollar cross jumped up to highs against the dollar not seen since the 28th of October 2021, and the anticipated official efforts to psyop the paper gold price lower to intervene completely failed.
He said psyoped, fake, lie, manipulate. You heard him. He said it failed. Well, it's not stopping him from attempting.
Hey, Andrew, we've had a lot of incoming questions here this week about the paper market volatility. Can you tell us what you think is going on more immediately?
Yeah, Shane, in a nutshell, the recent paper-centric selling, the bid pulling, because these insiders do not want to put themselves, or officials do not want to put themselves in a position they cannot deliver physical into, and that they're coming due actually next week.
That's this week. That's another reason why you're seeing precious metals drop. Contracts coming due, delivery, demand of delivery.
While it warned of a paper market scramble to cover off as many short bets as possible, which is really what this is about, this counterintuitive paper to physical divergence into a rising physical related ruble price ends up strengthening the benchmark of a ruble price benchmark significantly higher than the COMEX-centric paper dilutive price. Russia offers a 30% discount for oil and gas to friendly countries willing to pay for oil in rubles or with hard money gold. Misreading the double down official sanction efforts. I mean, these are real double down efforts to interfere in the ruble cross, basically, is that the multi-billion-dollar Russia gold energy trade is setting the global physical price, gold price, significantly higher than the incestuous derivative heavy LBMA price setting PM gold fixes indicate, which again, we've just seen the PM fix that we do this is usually 3 o'clock at the fixed time. Now, our liquidity providers absolutely confirm that sovereign size arbitrageurs are taking every ounce put on offer at every single PM gold fix. Now, the long awaited paper market price reset process is underway, and ironically, it's the West that's triggered it. Now, bottom line, for many years, Russia and China have surreptitiously milked the undervalued paper market set gold price sufficiently to have become the global physical market price setters. Now, these arbitrageurs are going to continue to suck out paper gold credit, convert it into physical, albeit at an increasing premium to spot, exchange it for oil, gas, commodities at a discounted price, sanitize these assets, and then sell them back into the global the supply chains. Now, when trying to understand how hard assets led by physical gold are now reintegrating into the global monetary system, one must really question the current official narrative. When every single news source has an identical narrative, it's healthy to question any such narrative that it's not propaganda, no matter what it is, would be.
Oh, yeah, I agree. Like you said, on no matter what it is, they all are reading from a script. That's how you know this is fake. I agree with Andrew.
Look, I want to be sure we're not taking sides here, just focusing on how gold fits into this picture. And completely, geopolitics completely aside, Russian central bank anchored gold floor is interesting as it's created a massive arbitrage opportunity to take this undeliverable leveraged COMEX paper gold price, as we say, EFP'd, into this deliverable 10 times larger spot gold market to buy physical gold, to exchange it with Russia for heavily discounted oil, and to sell this oil into the global market at a massive profit. It's not small potatoes, as Western buyers are increasingly cutting themselves off from Russian oil supply too. And it's raised this premium. So they're shooting themselves in the foot consistently, raising the premium for physical oil sold by OPEC plus several dollars above the quoted Dubai benchmark price.
Yeah, and remember, Iraq and OPEC said they will not produce more oil. Over the past week, Iraq hasn't even sent America any oil. And then for some reason, we're seeing oil prices drop today. Well, definitely because China's shutting down. That means less people, at least 1 billion people. That's minus 1 billion people driving. So,
Now, Brent right there happens to be currently trading at 108. It's been 100, but basically it's 108 today. But liquidity providers holding rubles or gold confirm they can swap these rubles for physical gold for $75 oil, not $108 oil, which represents a 30%, slightly over 30% discount to Brent crude. Now, it can work for any of the many oil markets, but it's to keep it really simple. Let's look at Brent as gold benchmarks this trade, as it benchmarked this trade this morning at an average of 1950 spot. So the 30% discount per ounce of gold bought exactly 26 barrels of oil at that price. Now, not even accounting for the ruble gold price being $50 higher than spot, allowing premiums to be paid above 1950 spot for T+2 Basel III NSFR compliant gold, even if selling this sanitized oil back at market at full price, the net round trip arbitrage profit per ounce, including the profit on the paper to physical spread, was really around $800 an ounce. This is very close to what we looked at last time. It's fairly consistent. Now, obviously, this oil trade is limited as to what is being put on offer at the PM fixes, and that is not everything is being put on offer. So basically, anything that's put on offer has to be deliverable. Now, nevertheless, ultimately, it'll incentivize tons of gold to be bought and bartered for oil. But here's the fly in the psyops ointment. The gold that flows into Russian central banks to pay for the oil squeezes the physical market, sucks out paper market liquidity, and bolsters the US dollar, the ruble US dollar exchange rate. Now, the physical gold transacted is simply on a one-way trip into the Russian central bank, where it bolsters the ruble versus every other fiat currency and builds Russian physical reserves at the expense of the West. Officials may be able to rinse out hot money, but they're on a loser by discounting paper gold beyond what can be rinsed out from hot money's hands. Now, as affirmed in our well-connected liquidity provider meetings last night, since the 5,000 ruble gold peg achieved the Russian central bank's objective of stabilizing the ruble versus the global fiat crosses, it's been micromanaged to keep the ruble exchange rate relatively strong and stable. Have you noticed? It is consistently stable, and no matter what the price. And basically, it's consistently evidenced. Ruble benchmark gold somewhere between anyway $30 to $60 higher than the COMEX benchmark gold. That varies, but it is all about the exchange rate. And despite official interventions, the ongoing Russian central bank negotiated bilaterally settled gold price is the anchor increasingly stabilizing the ruble. Therefore, we see the ruble price of gold vary, but it will stay within this higher band. And this morning, as I say, we were looking somewhere between 2009, 2030, 2015 when I last looked, but some always consistently up to around $60 above the COMEX. Now, this has the effect of raising the COMEX price, and we figured it reverts back to the 30 to 50 range by dragging COMEX price gold up as a hot money supply simply starts to run out. As you get lower and lower, obviously the hot money that came in it's been rinsed already. It's no longer there to be rinsed. So therefore now you're at that point there, you're starting to liable yourself for physical delivery obligations. So you lower this band and it will obviously expand accordingly. So officially intervening directly in the ruble cross, it actually poses liquidity constraints. Obviously we know that central banks openly intervene in whether it's the yen cross, whatever it might be, they openly intervene in the FX crosses. But the ruble cross poses liquidity constraints, which leaves officials really one option, and that's to try and devalue the globally set benchmark gold price to undermine the ruble gold price underpinning the ruble. But having no physical to sell, officials are forced to sell paper gold, which, given the 30% discount provided to friendly nations paying in rubles or physical gold.
Now that's what we're seeing right now, the paper market, they're being forced to sell the paper.
For oil, drives the active arb trade that takes every single paper-centric ounce EFP'd into the spot markets. Now, while officials try and block this trade, it's impossible. The global physical benchmark is now being set outside the LBMA, and every single day at the margin, physical gold demand is on a one-way trip from the West, and it is sucking out LBMA paper market liquidity. So at the margin, and we always talk about at the margin, we see a real true supply-demand physical price emerging from the paper market ashes.
See, but this is why the paper market are being forced to sell, which again drives the spot market price down, a form of manipulation. So eventually they're not going to be able to use the paper market to manipulate the prices anymore. No, no, no. The actual price is going to catch up to the demand. That's why I'm saying don't panic. Don't sell. Hold tight.
While there's lots of good analysis that supports empirical evidence that China's true central bank holdings are multiples of what's officially reported, we've talked about this before, so it is with Russia. And to provide context, Russia has alone accrued significantly larger unencumbered physical gold reserves than the combined central bank gold reserves of the major two price setting US and UK countries, who determine the gold price daily fix, that is. And as we previously contended, based upon close to 3 years of information gathered from very well connected liquidity providers exposed to the Russian gold markets, unreported Russian central bank gold reserves, mostly sourced, as we say, through Dubai, Africa, are pretty much at best estimate significantly higher than officially reported. And as we said last time, probably around 14,000 tons. That is probably a real number.
In case you can't understand Andrew based on his accent, the United States is supposed to be the #1 holder of gold at 8,000 tons. He's saying that China and Russia have been lying about their holdings now for years, based on their contacts who know better and who actually work in there, that Russia actually has by themselves 14,000 tons. That's almost double what America has. So they're ready to go to currency war. That doesn't even count what China has.
Russia and China have already got a plus 9-year gold trading alliance, and these aggregated reserves dwarf the combined reserves of every other central bank combined. Every other central bank. And we touched on this last time, and we got further confirmations of this. Most analysts aggregate the PBOC physical accruals are somewhere between 25 and 30,000 unencumbered physical tons. This aggregates the China-Russia Gold Alliance. Bear in mind, they are a gold trading alliance, have accrued around 35,000 tons of physical gold, conservatively. Sufficient.
Combined 35,000 tons. If they think that Russia has 14,000 tons, well, that means China has 21,000 tons. And over here in the United States, keep in mind, we don't do audits of our gold reserves. Rumor is we don't have any gold. And if we did, they're only reporting about 8,000 tons, which means we're way behind that game.
To benchmark a real global physical price, well, they've been happy to sit back and take the paper price, but there comes a point now where the sanctions have really triggered a major move higher. So Russia and China are working together on how physical gold is being priced. And given that both these allied central banks have long banned exports of physical gold, the offer to sell physical will be determined again at the margin and is currently being set by the spot gold ruble FX cross, which in turn benchmarks the gold energy trade price consistently $30 to $60 above the LBMA's paper dilutive price. It's such an important point, and this is what's going to keep making the dips will be bought. Our liquidity providers see little change in how Russian central banks bilaterally settled prices are determined. Removing the peg gives them flexibility. It's as simple as that. Physical gold continues to be used as hard money to purchase energy and commodities at favorable prices. The Russian central bank will continue to benchmark this gold to maintain a strong ruble cross and to buy gold sufficient to stabilize the ruble against sanctions. In other words, they have the necessary physical bullion holdings to ultimately control the physical gold market price. So really, if we have to sum it up, Russia is employing physical gold for the purpose it was designed for, stabilizing a currency, its currency. And the continued physical gold inflows into Russia is draining this tight for supply gold market at current prices and will serve to force discipline on the Western cartel. There's no other way of looking at it.
And all of you who have been stacking gold and silver, you are going to be smiling ear to ear. You're going to be happy that you bought into precious metals. Don't pay attention to what we see today. It doesn't matter. We know that's all fake. Listen to what Andrew's saying. They're being forced to sell the paper contracts to try to cover their butts.
It's going to drain the LBMA and the COMEX of paper gold unless they allow the paper price of gold to rise above the floor. That hasn't happened yet, but it will.
So there you have it. You listen to Andrew. He's telling you don't fall for this. We know the paper market's being smashed. Don't fall for it. That trick's going to run out soon. The LBMA and the COMEX are being exposed. Russia and China are in position to set the value, and they hold the most. They hold tons of gold and silver. And now we're going to find out how snaky our government is. They've been lying to us. Ron Paul has been trying for years to get an audit of our gold reserves, and he's been turned down several times by the Federal Reserve and by our own politicians. That's why I'm saying don't panic about what you see on the market. Don't panic at all. Hang tight. It's going to come right back around like a boomerang. So do me a favor, hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. And I'll catch you later. I'm out.